Yes, all set, and this is our usual masterclass Saturday evening session, right? It's 4 o'clock. We are on the 19th of October, and what we have in our hands is a bounce back. A bounce back in terms of points, it's just 100 points, but from the lowest point of yesterday's trade, it was a meaningful bounce. So we will first understand the nature of the bounce back. It will be amazing to take a look at the bank Nifty and how it played out. And then we'll take a look at few sectoral indices also to make sense of the market going forward next week. Starting off with the Nifty. We'll start from the weekly time frame. I have the weekly as always, daily, and over here the 75-minute time frame on the right hand side. The weekly has given us a 3-week correction. In terms of Heiken, we now have back-to-back 2 negative Heikens, which in terms of price analysis is suggesting that the prices are weakening. Of course, it's weakening. In terms of the structure of the weekly chart, when we talk about the word structure, we mean the broader, the larger picture. I have the 52-week linear regression channel, which is sloping up. We have our usual trend indicators, which is positive. The momentum definitely has taken a beating, which is, of course, the case when the markets cool off like this or consolidate like this. Momentum indicators always cool off. So momentum indicators are not favorable. What does this mean? This means that a structurally positive bullish chart is going through a short-term correction. This is what it means. It does not mean that the short-term correction will lead to a multi-legged medium-term, long-term correction. It cannot predict that right now. Neither can it predict that the short-term correction is over and the market will bounce back to an all-time high. These are indicative of what's happening right now. So if you ask me from the weekly time frame, it's positive. It's predominantly positive. The readings are mainly on the positive side. And I can add, let's say, cautiously positive, because the fact that the momentum indicator has turned down, this can lead to the prices also to reverse down more than what it has already reversed. So we need to be a little careful with our long trades if we are taking them from the higher time frame like the weekly chart. So cautiously bullish weekly chart. Come down to the daily. The daily, I have a 21-day linear regression channel sloping down. The trend indicators are down, the momentum indicators down. So the readings over here are predominantly clearly on the downside. Few days back, we had a bounce back, which we like to term it as a thunder setup on the short side, a pullback thunder short setup, and the index has opened on the downside. In fact, I'll take the liberty to shift from the Nifty spot to the Nifty futures, because on the futures chart is where I have done all my price tools and analysis over here to figure out the support. And the reason is because Nifty futures gets traded, whereas Nifty spot is more of a derived entity, right? 24,600, 24,650, I had a nice fib support zone, anticipated support zone. And that's exactly where it touched in yesterday's trade, and we have a decent bounce back. Going to the fact that the rationale, the linear regression channel, the trend, the momentum, the entire look of the structure on the daily time frame is all weak, and it is a negative chart. It's a negative chart which has bounced back. Full stop. This is where it stands. It does not tell us that it has bounced back and it will bounce back more and maybe all-time high. Neither does it tell us that it has bounced back but it will not last and it will fall further down. So do not fall for either of them. Go with what your analysis tells you, and the analysis is from the daily chart. Negative, we have some bounce back. The bounce back has come from a decent fib, but it's not enough. The momentum indicators have not turned. The trend indicators have not turned. In fact, if I take a look at the 75-minute time frames, the turn up is very, very nascent. The turn up is very, very fresh, very new. It's too early to come to a conclusion that we have a bottom in place. Don't do that. Let's wait. Let's wait for at least couple of more days. And why couple of more days? Why not 3 days? Why not 1 day? That's because if in the next week on Monday and Tuesday, if we happen to have a higher low, then we will have a fractal low. A fractal low would be, it's like the bare minimum expectation of a low in place. So daily chart is predominantly negative. It has given us a bounce back. And most important going forward in the next couple of trading sessions is how good is this bounce back. That is important. In terms of levels, of course, yesterday's low, which is close to 24,600 futures, is the trigger for further downside, and I have a couple of levels marked here also. And when it comes to the bounce back, I have to take you to the 75-minute time frame. Now on the 75-minute time frame, what I've done is I have plotted three meaningful anchored Vwaps from the high. Out of these three, the second one, which is this one, has tested itself in the recent past and it has worked well. And it is this level, this one, which is a little above 25,500. I have something close to 25,500, but I'm paying more attention to this one and this one. So 25,500, 25,400, 500. If I, if I just drop in a fib retracement and I need to add more levels to this, something like a 23, 38, 50, 61. So I can keep this drawn, I can leave it. As of now, the anchored VWAP that I was mentioning is close to the 23.6. Now, if it reacts from 23.6, means the market is really, really weak. The market the Nifty to show us that, listen, I have some strength left, I will personally say a minimum of 50% retracement, means 25,500. That will give me some hope that this market has given us a pretty meaty bounce back and may give me an all-time high. So until and unless 25,500 is coming up, I don't think it's there any particular need to be quote-unquote bullish. You can be cautiously bullish, careful and bullish hit and run, take and buy now and sell after some time or tomorrow. Those kind of stunts can be done, but the bullish word should be kept aside for some time unless 25,500 is taken out. So the Nifty view is predominantly on the cautious side. If you are a momentum trader, short-term trader, the day is going to be the same like the rest of the days of the year. But if you are a long only cash market trader, something that I've been repeating like a parrot for the last 2 weeks, is stay away, stay light, don't go long right now. I would maintain the same view. That's Nifty. Now the star, before I go to the star, the CNX 500, little better, because we need to remember something. The low, I'll just quickly go back to the Nifty chart. The low that Nifty has just recently breached was this low, this one. And this is your 7th of October. Now, if I come to CNX 500, your 7th of October is still here. So broader markets, if you take a look at mid cap, is way above its 7th of October high. If you look at small cap, it's significantly above its 7th of October low. Fine. So clearly, mid caps, small caps have clearly outperformed the benchmark Nifty. That's primarily because majority of the damage has come from large cap index, heavyweight stocks. Something that comes to my mind immediately is Reliance Industries, right? So the damage has come from the large caps. The large caps have given us the damage. The small and mid caps have held well. How do we take this statement? How do we take this observation? Do we like this? Or do we think it's a sign of a caution that is this leading to a major top in the market? because the large caps are not, the large caps are actually dragging the market down. I will say yes. I will. If I had said few minutes back that the view on the Nifty, be cautiously bullish, I would say that be extra cautiously bullish, because it's the large caps which have dragged the index down, right? So we need to be careful, because the small caps may bend later, but they'll do a catch up very, very quick. When they fall really fast, right? So let's keep this back of our mind. Now let's come to the star performer, and I would like to bring in Bank Nifty. Now, why am I calling it the star is not because it gained the maximum in yesterday's bounce back in yesterday's trade, not because of that fact, but because of the fact that it showed immense leadership in yesterday's bounce back. Yesterday, when the market was falling and it had breached the low of 7th of October, most of the screen was pretty red, and strength started to come in. Of course, Axis Bank was up from the very beginning, but the others also chipped in pretty well. Let's talk about Bank Nifty, and in this case also I would analyze the Bank Nifty futures with you first. So what we have is a volatile uptrending weekly chart. It is an uptrending chart. I have the 52-week linear regression channel sloping up. The trend indicators are predominantly positive. But the problem over the last, I would say, few months is the fact that it has been retracing all of its gains. It's not retracing 50% and going further up. No. It is gaining some grounds. It is retracing most of the grounds, making a new high and retracing almost 80, 90 or even 100% of the previous rally, which has created a range bound uptrending market. It is uptrending, but it's not smooth. It's volatile. The weekly chart is bullish, but I would say the momentum indicators have turned down. My Heiken language tells me you need to be a little careful, because in any case, if last week's low is broken, that's not good news for the Bank Nifty at all. So I will again say it's bullish. It's a positive chart. It's a volatile chart, positive, volatile. And so I will be cautiously bullish based on the weekly. So if you are if you're a trader who likes to take calls from the weekly time frame, stay bullish, but be a little careful. Daily. Now, daily seems pretty similar to that of the Nifty, that the 21-day linear regression channel is sloping down. The trend, the momentum indicators are all down, but it has stayed. It has stayed above the 7th October low. It has created a huge outside bar yesterday, and it has led the rally. When you have the most important sector which carries more than almost close to 40% weightage of the market, and that leads from the front when the market requires it, it's always a good sign. It's always a good thing. So we have a bounce back. We have a very, very intense looking bounce back with a vengeance kind of a bounce back. Someone would draw a trend line like this and will say, wait, listen, this is a trend line breakdown. And now the market is coming down, and when you start to expect the market comes down, zoom, it goes up. So it's got a vengeance back to the bounce back that it gave us yesterday. Let's not get dramatic. The important thing is whether it will sustain or not. Directional cues are not that great. It's not that you should jump on your feet that way. The Bank Nifty will go to an all-time high. No, it's too early to say that. I have a fractal low on the 7th of October. That's not a big deal. But for this to be a low, for this 51,250 close in yesterday's low to be a low, I will also give it a good 2 days time going forward. Now, after a big move like this in one day, generally prices, charts, indices, they consolidate, they slow down. They should make 2 smaller candles on Monday and Tuesday, hopefully. Once that happens, we will get a fractal low down here. We will get some hope that, yeah, we've got a short-term low in place. And then we will, act according to how it sustains. So is it a bullish chart? No, it's a negative bearish chart. It's a chart with, like the Nifty, it has also bounced back, but this bounce back is impressive. We are impressed. We would like to see whether the bounce back sustains or not. What do you mean that the bounce back may not sustain? Of course, by the look of it, by any chance, if Friday's low is breached, if this was a fake move, if this was a move by the market to come up, liquidate and then crack, if that was the intention behind yesterday's move, then by Monday or Tuesday this low will be gone. If this is gone, forget buying for weeks ahead. If that happens, I'm drawing all the possibilities. However, if that doesn't happen, and if it sustains, pretty good, no complaints, we will look for buying opportunities in this pocket. So, negative chart has given us a sharp bounce back. We will give 2 more days just for the fractal low to shape up, just for the move to consolidate, and then hopefully we will get some buying setups. So, we are positive, cautiously, and looking for buying opportunities within the banking space. Okay, clean. That's good job. Come to the rest of the sectors. Auto, pretty sharp sell-off. Now, weekly structure, fine. Momentum has been down for quite some time. Not a good news. So a structurally positive sector has started to correct, and come on, it should correct. Look at the way I'm scrolling back in history, and I've hardly had a correction. The last time you had a correction in the CNX Auto was Jan 23, almost close to 2 years back. So please let it correct. Let the prices come down a little bit. Let the valuation players also find some rationale and reason to buy stocks at lower prices. So it's healthy. So let it correct. Weekly, structurally still positive. Most of the readings are actually still sloping up. So I wouldn't say that the weekly chart is negative. I'll say the weekly chart is still positive. But it is due for a correction. It is coming down. The momentum is down. So I will also add the word cautiously bullish. No need to jump and start buying the stocks which have come down like a Bajaj Auto or a Maruti or an M&M. There's no particular need right now. But yes, you can start looking for opportunities. Start looking for supports. Come down to the daily time frame. You have a 2-legged correction. It's always good to see a complex correction like this. Trend on the downside, 21 period linear regression channel sloping on the downside. My momentum indicator is on the downside, and I have a range expansion as well. There's no particular need to draw Fibonacci right now at this juncture. What is very obvious, it seems that the index, the entire pack will try and find some kind of a short-term support in this zone. It's also important to remember what kind of fall has led to this correction. The sharp sell-off, Bajaj Auto, prior to that Tata Motors have been coming down for quite some time. M&M has been trying to hold on, but it has given up recently. Maruti, I think earnings is coming up, and that stock has also come down. So I think the auto will continue to face selling pressure. They will continue to stay down. Do not be in a hurry to buy. If you find any shorting opportunities, if you do short the market, you can look for it. So I'll say cautiously bullish from the higher time frame, bearish from the lower time frame. Do not short at this price because already the index has fallen quite a bit, maybe on a better short-term bounce back. So negative views on the auto from a short-term point of view. Energy. Now this was primarily damaged by Reliance Industries. We can understand the weekly chart after a very long time and after a multi-month divergence, slant in nature. These kind of divergences are so frustrating. Has finally synced on the downside. Finally. You have a synced downtrending situation on the CNX energy. Now, structure-wise, if I take a look at the 52-week linear regression channel, it's positive. It's holding. It's bending down. Okay. Again, if I scroll back, the last time it gave a meaningful correction was a frustrating one down here because it led to a multiple legs of downside and it was a meaningful correction, this entire move. So let's see how far this correction can lead us on the downside. The weekly charts are weak. This is no need to use a cautiously bullish. This is a negative chart. On the weekly chart, we can clearly say. Daily, of course, is cleanly negative. No doubts about it. Are there any signs of a bounce back? Well, if you ask me, not so. Immediately, we can get some short-term bounce back, all right, but nothing to be very, very excited about. I think a lot depends on Reliance Industries. We can talk about this later today evening or in any of our live classes, but Reliance will play an important role going forward, like it mostly does. So, negative on the energy, unless we have a proper reversal. Finance, the view on finance is very, very similar to that of the Bank Nifty, a tad better than the view on the Bank Nifty. Because if you remember, the Bank Nifty on the weekly chart had formed a range-bound volatile situation, uptrending. But if you take a look at the finance, the movement is much more smoother. It's not range-bound. So Bajaj Finance, Bajaj Finserv and the others have played a role. That's good. It's tad little more, improving than the Bank Nifty. So keep an eye, same view as the Bank Nifty. We will give 2 more days to the CNX Finance for a fractal low to shape up. We would like to see whether this move that we got yesterday is not a fake move and it has sustained. And then you'll have a proper sustained move and then one can start to look for follow through rally. Maybe a 50% retracement of the previous fall. So look for opportunities over here. This is disturbing. The CNX Fmcg, the way few of these stocks have fallen is a little disappointing. Number one. Number two, it did not participate in yesterday's bounce back that much. It did bounce back from the low, but it was very small. The degree of the bounce back was small. The index closed day on day negative. The only other index that was negative was IT. So let's take a closer look at it. Remember, it had a great run. It had a great, fantastic run recently. Structurally positive, trend is also more or less positive. Momentum has turned down. It is bending, which has caused this correction, a multi-legged correction on the daily chart as well. It is still a positive structured weekly chart. One needs to be cautiously positive here. One can hope for a retest of the previous breakout points. The polarity can kick in and a reversal can shape up. So what I would suggest is looking at the weekly and the daily together. Let it fall. Let it come down. Let it underperform. And let it form a base by itself. There is no need for us to predict the low or anticipate a very strong low. Let it create the low. Because it is in no mood to bounce back immediately in a hurry. So all right, you come down, you create some kind of a base wherever you want to create the base. I'll keep an eye on ITC, Hindustan Unilever, Tata Consumer Durables, Bajaj, Godrej Consumer Products, Dabur, Nestle Britannia. I'll keep an eye on all of them and see which one bases out first, which one reverses first, which one finds good sustained buying, and I can position myself accordingly. So let it fall. Don't be in a hurry that FMCG has fallen, chalo kharidte. Don't get into that mindset. IT. Now, this weekly chart will give you the maximum confidence because it's not come down. It's consolidating for 4 weeks. Clearly, it's consolidating for 4 weeks. Trend strong, 52-week linear regression channel, beautifully sloping up. Momentum indicators, tad slowing down, but my M2 is still positive, so it is the most positive weekly chart that we have seen so far today evening. And yes, it is. Take a look at the daily chart. The 21 period linear regression channel is sloping up. The trend indicators are mildly up. The momentum indicators are choppy. I cannot find any kind of clarity from here. Yes, the price is also kind of range bound. There you go. So this has not come down. The negative from Infosys has very beautifully been taken care of by Wipro. Yes, few stocks have come off, but Emphasis and Coforge and others have not fallen that much. They have managed the index well. Is it going to break? Is it going to give us a breakout? I don't know. The fact that it held well, it has shown relative strength, tells me that if everything stays fine, if the market does not crack, if some kind of a panic does not come, if everything kind of holds well, this particular chart should give us a breakout. It may consolidate. It may continue to consolidate. It can bend down a little bit and consolidate. Can, create a larger consolidation. But eventually these kind of charts should break out. Infosys was trying. Infosys was right on the verge of giving you that breakout, but it gapped down yesterday. Wipro is supporting. So I think it's going to be selective. So it will not be easy to trade the IT from this juncture. View positive, selective, be careful, because it's not a situation where all the IT stocks are going up. So you need to be a little careful in this particular pack. But thankfully it's positive. It's got relative strength. It's got some strength in it. Metals, weekly, not bad. Trend, linear regression, momentum. This is a positive weekly chart. You will sense that, is it creating a double top? I don't know. On break of 9,000 only will confirm this double top. Maybe, time will tell us. Weekly view is positive. There's no particular need to say anything else. Daily has started to angle down, slope down. Momentum and trend are in sync. It has given us a bounce back. It has bounced back really well with the Bank Nifty Finance in yesterday's trade. Almost as much gains as the Bank Nifty, I believe. Private banks 1.9, CNX Metal almost 1.6% gainer. So it has participated in yesterday's bounce back. The low, which is close to 9,500, is acting as a polarity because earlier it was the breakout point. Now it is acting as a support. I would say the same logic. Give it a couple of days time, Monday and Tuesday. Wait for some fractal lows, wait for some clarity, and one can look to go long. Metals with the banks and the finance, you keep aside as your long watch list. If markets hold well, if you see any stocks from these two pockets showing further strength next week, go long from this pocket. Pharma, tricky, because weekly, too good to be true, all positive. Yes, the Heiken body has started to shrink. Shadows have started to come up, so it's telling us it's consolidating, and it's very clear on the daily chart also it is consolidating. Trend wise okay, direction wise okay, momentum wise not okay whatsoever. The momentum has come off the chart big time. If the momentum has come off the chart big time like this, eventually price should pick up, which means price should fall, or the price should give us a huge breakout for the momentum to reverse. Which one will happen? Looking at the divergences, looking at the behavior of price, looking at the breakout failure, ideally this particular chart should show us relatively lower levels, ideally. Now, it's a bit of a preemptive analysis because there is a divergence, there is a breakout failure, and that's why it is leading me to preempt that move. Let's see. What should we do? Ideally, stay away. The best thing to do would ideally to stay away, not to trade. It's in a choppy state. If and only if you see a break of Friday's low, then you might get stocks coming down, right? So it's not the easy sector to trade, honestly, but let's see how it plays out. PSU banks struggling, private banks leading the move. That's been the case. That will stay the case. And finally, the last two sectors are realty and consumer durables. Realty, I will also say, same like pharma, is to stay away. Though you can clearly see the weekly chart of real estate, CNX Realty, has created a beautiful support. Momentum has been down for quite some time. Structurally still positive. It has gone. You don't need anyone to show you this range bound price activity. That's why the momentum has come off. One can get the breakdown. One can. If you zoom in a little bit and you take a look at the last couple of weeks Heiken readings, if last week's low is gone, 1020 kind of level for CNX Realty, this pack is coming down big time. So there are rationale of weakness. There are no such rationale of positivity from the daily chart or the weekly chart. So I will say stay away, please. Stay away. If you're really looking for some short from the weekly charts, you can put an alert on last week's low. The final sector, consumer durables. This is good looking, beautiful sloping, positive trend, linear regression, momentum. It's got everything in it. It's the star, I would say. After IT, beautiful looking weekly chart, positive. However, with the overall markets, this pack has also come off. Titan, we have seen how strong the correction has been. It has bounced back in yesterday's trade, but the correction has been sharp. Daily, not so positive. Again, the same logic. It has bounced back, fine. We don't complain about that. But it's too early to say that the low is in place. This can create further weakness if Friday's low is breached. After a big range expansion, we have a move close to 2 standard deviation on Friday. General price tendency will be to consolidate. So going forward, Monday, Tuesday, Wednesday, you might see consolidation. So यहाँ पे immediately there is no particular need for you to start trading. I would say whatever discussion we had right now, banks, financials and metals, and maybe some selective IT. You can keep on your watch list and see how well they sustain. If they sustain, do they give us a follow through long setup? And if the long setup comes from them, it's worth taking it. Rest, I would say you should avoid for the time being. Okay? That's my view on the Nifty, Bank Nifty and the sectors. Now we will move ahead. Usually we will take a look at the positions we have discussed last week, and of course your doubts and questions. How can I miss them? So chaliye, let's move ahead with our usual session.